Bitcoin traders may be watching the wrong chart right now. The obvious chart is Bitcoin. It is sitting near the $63,000 zone, looking heavy, frustrating, and dangerous enough to make every trader ask the same question. Is this support, or is this the beginning of another breakdown? But the deeper signal may not be on the Bitcoin chart at all. The deeper signal may be inside the AI trade, because this market does not look like investors are running away from risk completely. It looks more like money is choosing a different kind of risk. And that is the part Bitcoin traders cannot ignore. When a market is truly scared, almost everything risky gets hit at the same time. Crypto falls, growth stocks fall, semiconductors fall, speculative names fall, and cash becomes the safest place to hide. But right now, the picture is more complicated. Bitcoin is weak, but AI-related stocks are still commanding attention. Semiconductors, memory chips, data centers, Nvidia, Micron, and the whole AI infrastructure story are still acting like the market's favorite casino table. So the question is not simply, why is Bitcoin down? The better question is, why is money still willing to take risk, but not here? That is where the story gets uncomfortable. Bitcoin is not only fighting bad candles, it is fighting opportunity cost. Every dollar that goes into AI momentum is a dollar that is not chasing Bitcoin. Every trader watching Micron, Nvidia, or the next AI infrastructure winner is a trader not staring at a Bitcoin breakout. And when attention moves, liquidity moves. When liquidity moves, price can stay weak even when the headline panic starts to fade. This is why Micron earnings matter so much this week. Micron is not just another chip company reporting numbers. It is becoming a lie detector for the AI rally. If Micron confirms that demand for AI memory, data centers, and high-performance chips is still strong, then the market may read that as one more green light for the AI trade. And if the AI trade stays hot, Bitcoin may have a harder time getting fresh buyers because the market already has a more exciting story to chase. That is the brutal reality of markets. Price does not move because an asset is important. Price moves when capital is forced to care. Bitcoin can still be the long-term store of value story. It can still be the digital scarcity story. It can still matter in the next cycle. But in the short term, if the market believes AI is where growth, liquidity, and momentum are concentrated, Bitcoin can be left waiting at the door. And this is where many traders make the mistake. They look at Bitcoin near 63,000 and think the whole story is technical. They draw support, they draw resistance, they wait for the breakout, they wait for the breakdown. But the chart alone does not explain why the bounce feels weak. The missing piece may be rotation. Bitcoin may not be collapsing because the market hates risk. It may be struggling because the market has found a risk trade it likes more. That difference matters. If Bitcoin were falling while everything else was falling, the answer would be simple. Macro fear, liquidity shock, risk off. But if Bitcoin is falling while AI still attracts capital, then the message is sharper. Bitcoin is not just fighting fear. Bitcoin is fighting relevance. It has to prove that it deserves attention again. So for the next few sessions, the real test is not only whether Bitcoin can hold the 63,000 area. The real test is whether capital comes back into crypto when AI is still glowing. Watch Micron. Watch Nvidia. Watch semiconductor momentum. Watch whether traders keep paying for the AI story. Because if they do, Bitcoin may need more than a support level. It may need a reason for the market to care again. And that is the uncomfortable question going into this week. If AI keeps winning the liquidity battle, who is left to buy Bitcoin next?